Hello, this is Rachel live from Kalkine Studios in Sydney, and you're watching the early trades. The S&P ASX 200 is up today, gaining 0.38%. That's despite crossing below its 20-day moving average. The top performing stocks in this index are LIFE360. Their shares are up 15.6%, and PALADIN Energy up 12.41%. Over the last 5 days, the index has lost 2.83% and 2.69% over the last 52 weeks. Transport and logistics group Brambles has warned that a global pallet shortage is likely to drag on for another year. It hiked prices by 8% in the December half to help claw back $377 million in soaring timber costs. The company has been battling to secure enough timber pallets because the pandemic has led retailers to lift stock levels in warehouses to ward off production shortages on their own shelves and stockpile empty wallets as a safeguard as supply chains buckle in the pandemic. APMH Human Services increased revenues by 29% in the first half of financial year 2022 compared to the first half of the year before, and that was thanks to employment services in Australia, Europe and North America. Activities in the Asia Pacific declined. Statutory NPAT posted losses of around $43 million from $0.6 million in the same period the year before. APM raised $339 million in an IPO this year, with the proceeds used to refinance $160 million in US dollar-denominated debt. The company will pay a final dividend for financial year 2022 between 40% and 60% pro forma NPATA. No dividend was declared for the first half of financial year 2022. Moving on, Magellan recorded a further $3.2 billion in outflows since its last update, including $2.6 billion in lost institutional money and $600 million of retail. That includes intentions to redeem as well as formalised redemptions. It takes net outflows this year to $8.7 billion. Total funds under management decreased to $77.2 billion as of the 23rd of February. That was down $87.1 billion, including market moves since February the 9th. In its previous update, Magellan disclosed it had lost $5.5 billion between the 1st of January and the 11th of February. Oz-wide Bank's statutory NPAT profits rose nearly 20% in the first half of financial year 2022 compared with the first half of financial year 2021, thanks to an increase in mortgage underwriting and private bank activities. Statutory return on equity gained 10.5%, the loan book grew 8.7% and net interest margin eased by 1 basis point to 199 basis points. The bank declared a fully franked interim dividend of 21 cents a share, up from 19 cents a share the previous period, and underlying earnings of 34.4 cents a share, up from 27 cents. And payments giant Block suffered a $77 million net loss in the December quarter, its first quarterly loss since June 2020, denting profits for the year as revenue soared to a new high. The company, formerly known as Square, grew total revenues to $17.7 billion for the full calendar year, not far from doubling the $9.5 billion in revenues achieved in 2020, while higher costs weighed on net profits. The quarterly hit to profits brought its full year 2021 net profits down to $166.3 million, the lowest level since 2018. The results reflected a 60% jump in operating costs, which touched $4.3 billion for the full year. And Genworth Mortgage Insurance returned to the black with a statutory NPAT of $192.8 million for the full year 2021, thanks to $295.8 million of underwriting. It reported a loss of $107.6 in financial year 2020. Underlying NPAT was higher than statutory NPAT because of unrealised mark-to-market investment losses. Net earned premium rose almost 20% to $370.5 million and is expected to be between $315 million and $375 million in financial year 2022, amid slowing levels of new housing credit and reduced levels of cancellations from refinancing to be reflected. It's declared a fully franked ordinary dividend of 12 cents a share and a special dividend of 12 cents. Ordinary dividend per share rose to 17 cents from zero in 2020. Well, that's all for now on the early trade. Stay tuned to Kalkine TV with many more shows lined up for you with updates across the economy, markets and sectors. This is Rachel signing off for now.